Hello, everybody, and welcome to OAG's latest webinar, where we're going to take a look at the Middle East market. I do believe we might not have done a Middle East focused webinar before in our 4 years of running these, so very timely, in fact, probably overdue. So let's, before we get into the detail of it, let's welcome our speakers. We have, as ever, I'm Deirdre Fulton. For those of you who've not joined us on a webinar before, I'm a partner in Midas Aviation and been hosting these webinars for OAG for some time. As ever, we have John Grant, OAG's Chief Analyst. Welcome, John. How are you today?
Good, Deirdre. Yeah, lots happening this week. Farnborough, airline results. It's a very interesting time to talk not only about the Middle East, but what's happening elsewhere in the world.
Eternally interesting, isn't it? And we are delighted today to be joined by Trent Mumford. Welcome, Trent. Trent is VP for Aviation with the Saudi Tourism Authority, so has real experience on the ground of one of the fastest growing markets in the world. So we're looking very much forward to talking with you today about what's happening in your market and hearing your perspective on things from your part of the world. Welcome.
Great to be with you, Deirdre and John. Thanks for having me.
Great. Okay, so we promised you a look at the Middle East, all things aviation. I'm not sure we could totally do it justice in an hour, but we'll do our best. As John mentioned, it's Farnborough this week. I think we're all maybe not quite on the edge of our seats, but we're all eagerly anticipating the news that might come out of Farnborough in relation to aircraft orders. And in fact, I think I saw a headline about Qatar this morning announcing an increase to theirs. So we'll talk about that shortly. We'll talk a bit about how partnerships in the region are evolving. We're going to talk about some new routes announcements because there's been lots of those, and how infrastructure is keeping pace with how capacity and indeed demand is evolving in this exciting market. And we can't not talk about Saudi Arabia's ambitious Vision 2030. So we're looking forward to just taking a bit of a deeper look into past the headlines into what the numbers are showing us. So without further ado, we'll get into that. For those of you, again, new to us, we take questions as we go. You can stick them in the chat box and we'll do our best to answer them either through the chat function or on the webinar. So if there's something specific you want to ask any of us, then please don't hesitate to pop that in the chat. Before we go into the detail about the Middle East, we always like to bring you a little bit of a snapshot on what's happening globally and what we're seeing in terms of capacity trends. So a similar picture, actually, over the last few months, globally, certainly. Capacity growth has slowed a little. We were reporting 3.7% above 2019 for 2024. And we've sort of moved on now into feeling very apologetic for a couple of years for talking about 2019, but we're now using that as a five-year benchmark, which is slightly scary. That actually 2019 was 5 years ago, but there we are. So a little bit of slowing, just sort of minor percentage changes. Domestic capacity a little bit higher above 2019, and we're expecting that to sort of remain steady, obviously driven significantly by the major domestic markets, China, the USA, Indonesia, India. And international, we're seeing a strong position on last year, but also recovery against 2019 at the global level, certainly, which is a positive, isn't it, John?
Yeah, it is. I think it's quite good that it's slowed down because there's clearly, if you look at the results that we're seeing coming through at the moment, there's a softening of demand. And such are the margins in this industry that when airlines start chasing a few more passengers, when they start to discount by a particular percent or whatever it happens to be, and the last minute bookings don't come in, the impact on the bottom line can be pretty dramatic. And I think there's no better example of that this week than Ryanair, who clearly got it wrong. And they've been growing and growing and growing, and they've had to take a 15% reduction on average fares this quarter, which has consequently flowed right through to the bottom line being below expectations. And then forward comments about, we don't have much visibility about August and September. It's a week away, guys.
Yeah, that's quite a punchy hit, isn't it?
Yeah, it is. And then you look at what's happened with American Airlines in the US, and their results that are not going to be that great either. So bizarrely, those airlines that didn't come out of the pandemic and rapidly grow capacity seem to be in a slightly better position. So you've got British Airways, for example, in the IAG group, and this morning EasyJet, whose results surpassed any expectation, and subsequently saw their share price sky by 6 or 7% at the beginning of the day. So it's a really, really interesting place we're at, with demand slowing down, capacity growth. I don't think it's growing, but I don't think equally it's declining. And it's going to hover around this sort of level for a long time. And that's going to need careful management by airline CEOs all around the world. And we're seeing that in North America at the moment and in Europe, and it will ripple through into Central Asia and Southeast Asia and Northeast Asia over time. And in some ways, it's fortunate that we've not got some of these new aircraft coming through, and we do have the supply chain issues, because I think otherwise, another 2 or 3 percentage points, more capacity, and there'd be more blood on the table.
It's bringing us back to a bit of capacity discipline, isn't it? Which it sounds as if that's exactly what the industry needs at the moment. It's kind of interesting as well to, maybe we've been guilty of thinking for a long time, we were sort of thinking demand's going to soften. And it seemed really, really resilient through last year. Even in markets where we were beyond the sort of pandemic recovery point, the market seemed to be reasonably resilient against all of the price increases that we saw, and people having less disposable income, less money in their pocket. Travel still seemed to be being prioritized. I wonder if we're now seeing the impact of sustained higher interest rates and all things maybe starting to dampen.
I think so. Let's not forget that we talked about the revenge spend phenomena. I think that's nearly over. Certainly in most markets, we're back to traditional travel patterns. We've not got the corporate demand come back as much as we expected. So it's an interesting last half of the year we're going to have here, when we see how it all pans out. And of course, there are some airlines who are still growing capacity and will grow capacity and have long-term strategies that they're yet to put into effect. So in all, I think it's going to be tough. It's going to be tough for some. There's no doubt about that. But equally, skillful management will see some of these through. Cautious
optimism, or optimistic pessimism, maybe. I don't know. Something in the middle there. You heard it here, though. You heard it here first. John's calling it tough times ahead. Okay, let's move on to our next slide deck. Our next slide, sorry, in the deck. We just broke down a little bit the capacity by region, and we split this out into 2 separate charts for domestic and 2 for international capacity, really because we wanted to show regionally. We didn't want to consign the smaller regions to the bottom of the chart too much. So for scale, we've separated them out. Domestic, as we know, strong strong growth happening, across Asia Pacific and North America. Although Asia Pacific is still not at regional level back to where it was in 2019. There's still that lingering 10% to come, and that's effectively China outbound market, isn't it? You know, it has been growing.
It is, and it's about frequency.
Still,
That's driven, I think, by frequency on the short to medium international sectors. I mean, there is no doubt that, you know, outbound Chinese international networks are rebuilding, and Trent can talk about the success they have in Saudi Arabia with all of the Chinese airlines. And there are secondary markets in Europe that suddenly have got a Chinese service, and everyone thinks, well, they didn't have that in 2019. What's going on?
yeah.
So, but they're one a week. They're one a day, or perhaps 5 a week. They're not 10 a day between two cities, China to Thailand or something like that. So it's very nuanced, you know, and the Chinese airlines are certainly back in Australia. We've spoken about that in the past, and that will shake down as well. But those high frequency connecting points from China to Japan to South Korea to Incheon and to Thailand are not back. So that's what's driving that -9%. Whereas in Europe, you know, we're still seeing lots of international growth, more flights across the Atlantic, low-cost carriers are opening new routes, perhaps too many. But it's a mixed message in different parts of the world.
Interesting. And of course, Middle East, we can see there, you know, pretty strong international capacity growth, and we'll drill down a bit into that as we go into the deck. The domestic position in the Middle East impacted, of course, by what's happening in Israel. So not perhaps representative of the other things that are happening across the region. Okay, let's go on to our next slide, which takes us to sort of the region in the Middle East, and just a quick look at the country markets, all capacity data here, and all just simply July 24 versus July 23, just to get a sense of the year-on-year position. And we have some more analysis to come that takes a look at growth over different time periods. So we're showing here that position year on year. So growth rates are sort of similar across the two biggest markets, which are the UAE and Saudi. And then a little bit faster growth in Qatar this month. And that's part of a competitive position and play. Qatar are pursuing connecting traffic and pricing accordingly to get some of that connecting business over from Europe over to the Indian subcontinent and other destinations. Strong growth in Iran, and of course the position with Israel, as I mentioned. Saudi's the biggest domestic market in the region. And that there's pretty strong growth taking place there, and we'll talk in a little while, Trent, about domestic tourism as well as international tourism, because that's an important part of the mix. And yeah, let's go on to our.
Sorry, just go back, Deirdre, because I wanted to comment on Israel, because obviously at -34, it doesn't look good, and there are issues that need to be resolved there. But I was looking at some data just now, and it was remarkable how quickly the Israeli UAE market developed once it was opened. And the potential for growth and the recovery of that is quite remarkable. It went from 30,000 seats a year to over 850,000 seats in the space of 3 years, as every major airline ploughed into the market, either serving business needs, short break destination type holidays in Dubai, or sucking traffic out for Emirates Group that was flying onwards. And it's quite remarkable how there are still markets around the world that will go from zero to hundreds of thousands in demand once the shackles are removed and freedom of travel is allowed.
Yeah, yeah. And I think actually our experience is that when you have, and setting the pandemic to one side, but when there are geopolitical events or extreme weather events, I'm talking, the Icelandic volcano.
Can you name it? Can you name the volcano?
No, I'm not even going to try
Okay.
to. I'm not even going to try to. But a note here that actually we now seem to be entering a period of more geothermic activity, and we can expect, I think, more disruption in the years ahead from volcanic activity. That's just a rant aside. What I was going to say was that what you typically see in those kinds of events when they happen to disrupt a market is, for however long the duration of the event is, and it's probably fair to say that none of us would have predicted that events in Israel and events in Russia and Ukraine would have continued for as long as they have. But once the situation is resolved, historically, what you tend to find is traffic bounces back really, really quickly to a market. And I think it is just a case for these markets of, as the situation plays out, ultimately, we will get there to recovery. Let's go on to our next slide, where we wanted to look back a bit, and this is just looking at those two biggest markets, so Saudi and the UAE, over time. This is over a longer time series, back to 2000, and then a slightly shorter time series, and we'll focus in on that further going forward. So looking back over 25 years, we've seen the UAE grow at 7.5%. This is capacity on average each year, and that really is the story of the evolution of Dubai and Abu Dhabi over that time series, both in terms of growing their connecting markets and the growth of Emirates alongside that, and the growth of Dubai as a destination, and UAE as a destination, has contributed to that. For Saudi, we've seen a slightly slower growth rate, which is just reflective of where Saudi has been and the journey that it has been on. And so we've seen annual growth of 5%, which is still, considering that really we didn't see Saudi begin to open up until 2019. This is still strong growth, and I guess demonstrates the strength of having a big domestic market that that has the appetite to travel.
Yeah, it certainly does, and timing is everything in this industry. And it's interesting that about 2020, both Emirates and Etihad actually didn't have very many aircraft deliveries scheduled, so they had sort of plateaued with their network and their size. And obviously Fly Dubai have kept going alongside Emirates, and their growth continues. Whereas the Saudi carriers were growing, the low-cost domestic sector was rapidly growing with Fly NAS and others, Fly Adil, and that's continued. And they've got aircraft orders coming through now. It will be interesting to see over the next 5 years how much closer Saudi Arabia gets to that UAE market size. Of course, it has the benefit of a domestic market, which is something the UAE cannot compete against. But it's going to get very close between the two of them, particularly in the context of if you're going to achieve the objectives of Vision 2030, you're going to have that capacity into the market to make it happen.
Mm-hmm. Okay, and we're going to hear a bit more about how that's coming. Interestingly, if we take a look at that shorter time period, as you intimated there, John, the growth rates have switched. You've got Saudi maintaining that sort of consistent growth despite that period covering the pandemic. Again, the resilience of a domestic market that continues to travel. So we've talked about, there's lots happening. It's an exciting market. interestingly, in the latest ACI forecast, the medium-term view, which goes out to 2027, they project that the Middle East region will have the strongest growth. So, market size going from something like a 40% increase over that time period, undoubtedly fueled by all of the things that we know are happening. We've obviously got Saudi Vision 2030, which is 330 million passengers by 2030 and 250 destinations. And I'm going to let Trent talk about that very soon in a bit more detail. What's quite interesting is we've got these massive airport infrastructure projects. So you've already got two big hubs in Saudi, Riyadh and Jeddah, but there's a third airport coming, second airport for development for Riyadh, which is planned to handle 120 million by 2030, making it up there amongst the biggest. But the ultimate vision, I think, is 185 million by 2050, which may make it the biggest airport in the world. From sort of nothing at the moment, which is incredible when you think about the projected volumes. But of course, Dubai are not resting on their laurels, and the UAE have got significant growth ambitions too. And they announced recently DWC's expansion, which was always envisaged to be Dubai's sort of airport growth facilitator, and the plan certainly in the next 10 years is to get that to a point where it has 150 million passengers a year by 2034. I think in terms of a runway count, King Salman is 6 runways planned, and UAE is 5 runways planned. And you and I, John, have been around in the industry long enough, and Trent, I'm sure too, to know just how much hoo-ha there was over additional runway capacity in the UK. So my mind's kind of blown by the fact that we're now in a world where we're talking about six runways.
Yeah, and 3 simultaneous parallel operations in Istanbul at the moment. I mean, it's
incredible.
That's groundbreaking. Yeah, it just goes to show how much growth and what we can do when we really push the boundaries.
And of course, this year, Abu Dhabi opened their not this year, sorry, last year, opened their new midfield terminal, which increases capacity there too. So certainly in the short term, and the market doesn't really act in this way, but there's more capacity coming into the UAE at country level, allowing a bit of growth there. So I think what's interesting, and I mentioned earlier, we would come and look at some different sort of time series. When we look at international capacity growth, on those 5-year points, you can really see the impact of the Saudi Vision 2030 work that's been underway with their connectivity programme. You have now got international growth of 34%. This is just for summer. So I think we've got some slides coming that look at the first half of the year. So the numbers may differ slightly. But that's considerably above what we're seeing at what effectively are the regional competitor country markets. So Qatar growing at 20%, the UAE at 18%. So and significant growth across. This is quite busy, but sort of attempts to show really that you've got growth in Saudi, certainly across all of the regions over that.
The implications for these, Deirdre, they extend beyond the Middle East in terms of industry resources and the challenges of actually sustaining both these levels of growth and future aircraft orders, because we're in an industry that's currently in the middle of a supply chain crisis, and you can look at that as spare engine parts or aircraft coming off production lines, or you can look at it as human beings and pilots and licensed engineers. and people that we just do not have at the moment. And we need these pilots. And where are they going to come from? I mean, times must be tough if British Airways are investing in a pilot graduate scheme to the tune of £21 million. You know, that says where it's got to. Emirates used to do a roadshow around the world where they would go recruiting pilots, and they'd send some guys off on a swanky trip, put them in a hotel, and, you know, they'd court new pilots from around the world. They do it by video conferencing now because they're so desperately in need of these people that time is of the essence. So, and that's before we get to Saudi Arabia, and where are we going to find these pilots from? And that in turn means that we end up with some extremely high cost bases in airlines around the world who are trying to hold on to the assets they've got. That's why Delta put a 30% salary increase in on their flight decks. That's why American Airlines had to respond. That's why, you know, every airline in Europe is bonding their new recruits for a period of time because they need them to stay to operate. It's a really challenging 5-10 year period we are going to face when we don't have licensed engineers and we don't have the MRO facilities or the pilots that's going to facilitate the visions and the dreams and aspirations of these places around the world. It's the great unspoken word.
I think the exciting thing for Saudi, though, and Trent, you're closer to this than either of us, but it strikes me that with a significant population, you know, 36 million people in Saudi, and a young population. I think the average age is 25 or thereabouts. So you've got resources. They might still be in the evolution of training and you know, developing capability, but you've got resources in your home country to help facilitate the development of the industry, which is exciting.
It is, and there's lots. If you look at the investments in the airport infrastructure into airlines, so not only are we going to see Riyadh Air commence services next year, but we'll also see growth, significant growth, as was pointed out earlier, from Saudia, Flynas and Flyadeal combined, that there is a real investment in all aspects of the aviation ecosystem. So it's right through from developing the airports to developing the airlines, the fleet, and the capability that goes along with that. Much of Vision 2030 is about building an economic future for the kingdom post-oil, and that includes building a sector, particularly in aviation and tourism, that will provide jobs and growth for the Saudi economy.
Yeah, and also good jobs, good professional jobs.
Correct.
And, you know, I think when we look at that landscape, the sort of airport, even the airport infrastructure across the kingdom, 27 airports currently active, although the bulk of capacity, of course, going through Jeddah, Riyadh and Dammam currently, I think 76%. But that's changing. And we're seeing international growth now coming into other parts of Saudi, aren't we? Where I think 18 out of 27 of the airports have got international services. And of course, that's being driven by tourism development, isn't it, along the coastline with NEOM and the Red Sea and all of the development that's happening there.
Yeah, and the thing that, you know, I think we forget or also takes me by surprise is how well connected Saudi Arabia is to Egypt and Cairo. And everyone thinks about its all connectivity to the UAE and, you know, the bright lights, and then onwards to Southeast Asia for the migrant worker traffic. There's a lot of traffic that goes to and from Cairo with historic links between the two countries. And that's got opportunity for more growth as well. So it's, you know, it's sitting, Saudi Arabia, in the nicest way, is sandwiched between two very well-established local markets in the UAE and Egypt.
I guess that there's advantage there, though, isn't there, in terms of if you're turning on the taps of a a tourism, a whole series of tourism products in Saudi, then you've got a local weekend break market that actually potentially can help fill those destinations as they open.
Yeah.
It's got to be part of the play, hasn't it? Yes, and we'll talk about the further afield ambition and the route targets, but actually it's also about Middle East tourism, isn't it? In terms of growing those markets.
And Trent, I think, can I ask you? I mean, that's the UAE. My perception of the UAE passenger profile to Saudi Arabia is it's a high-end quality product. They're looking at the historic sites, etc., etc. The Saudi experience, and yet from Cairo into Saudi for leisure travellers, is it the same type of market profile, or are they different?
It's a real mixed market profile that we get from Egypt. There is obviously there's labour traffic, religious, tourism, VFR, and a lot of business, as well as high-end tourism. So it's a diverse market, not one that you can just pigeonhole and say it's one or another. It's a great mix, and if I look at the OAG data from last year, Cairo Jeddah was the largest route in the world by capacity.
Yeah. And from an airline perspective, that's great news, isn't it? To have a diverse mix of people on the plane. You don't want just lots of tourists going in one direction, or a business market that's solely reliant on a bunch of corporates that, if there's a downturn in that sector.
Absolutely.
So
ask any Aberdeen-based local airline about that particular issue and over-reliance on a particular product.
Yeah, exactly.
And I think, look, the core difference between us and the UAE, Saudi Arabia versus the UAE, is 85%, or not 85%, but a huge subsection of UAE traffic is transit. Saudi is the beneficiary of some of that transit traffic, obviously, via the hubs there. But ultimately, most of the traffic coming to Saudi is O&D traffic. With transit traffic representing less than 10%.
Yeah. And that's again, for a destination, you want people that are going to come to your market and spend while they're in your market. Whilst the transfer and the transit market is important, and there's opportunity there, no doubt. To stop over and experience a destination if you have if the travel works out that way. The reality is that you want people coming to your destination to spend in your destination, don't you? Simple economics say that's really the way forward. Let's have a look then at. So we've got a couple of slides that sort of look really at the Saudi achievements and ambitions. This one is just showing what has been added this summer in terms of new destinations versus 2019. And the ambition is 250 international destinations. There are now 194 from Saudi, which is an increase of 30% on summer 2019. And you can see how those spread across Jeddah and Riyadh and at country level. And you've got 24 new routes this summer to all sorts of interesting destinations. The China market we mentioned earlier, those are the newest, I think, aren't they, in terms of the route announcements. And then we've also got Toronto, Berlin, some other destinations in Europe, and it's kind of an interesting geographic spread, isn't it? That there's not we're not relying on just one market here. We're pursuing. It's evident that there's pursuit of different target markets.
And it puts in place a structure for a hub as well, doesn't it? I mean, it's got all of the composite requirements of a hub, natural flows, east to west, west to east, north to south, whatever it happens to be, which are all important. And of course, that very large domestic market.
Okay.
domestic underpins everything that we're doing here in Saudi. There is a strong outbound, but if we look at the China market for a moment, yes, we've had strong growth over the past in the first half of this year. 4 new carriers have announced that they're operating to Saudi Arabia from the Greater China market, and we'll touch on that in a slide shortly.
I'll just put that up just now, Trent, actually, so that we can see that.
Fantastic, thanks. And as you can see from the slide here, we're going to grow from 108,000 seats in 2023 to 251,938 seats in 24. That's 132% growth, massive. For us, and part of the 2030 vision, China will play a huge role in terms of the volume of tourists that we have to the kingdom. Our ambitions are massive. We've gone with Saudia, who launched Beijing last August. They're operating 9 flights a week, but it's the addition of the Air China, China Southern and China Eastern tails to the market, which has given us a huge uplift in quarter 2. We've already seen some of the data roll through. I think May was the most encouraging when we saw 90% growth month on month. Sorry, that was 90% growth on May 24 versus May 23. And then we've also had Cathay Pacific announce that they'll come into the market in October at the commencement of Northern Winter with 3 a week.
And I guess the
So
most
they're
important
starting with,
thing,
yes.
go on, Trent.
So they're starting with small frequencies, but we're seeing them build very quickly. The load factors are performing quite well, and it is predominantly 80 to 85% of the traffic is outbound China. So we're the big beneficiaries of that inbound Chinese tourism dollar coming from coming into the kingdom. But also what's important now, as we head into the second half of the year, we have that connectivity to the 3 major hubs in China, in Beijing, Guangzhou and Shanghai. And, you know, with code shares and everything else, and the networks that these airlines deliver, not only does it give us greater reach into domestic China, but also points behind. And talking to Cathay, they're looking at routes that, you know, are currently not served or underserved in East Asia and Southeast Asia.
And I think the really important thing is those 3 airlines in particular, Air China, China Southern, China Eastern, give you the distribution coverage and the access to the tour operator market and all of those things that are so important in that Chinese market as well.
It didn't happen overnight. There's been a lot of hard work by GACA, ACP, my colleagues here at STA, in terms of building that brand Saudi and Visit Saudi brand in the Chinese market. They held big promotions last year to really activate Destination Saudi in the mind of the Chinese consumer, working with Ctrip and other major tour operators in the Chinese market. And that gave the Chinese carriers the confidence to come into the market.
I think certainly serving the major hubs. We did a piece of work relatively recently where we looked at how we were trying to answer the question about, you know, was the Chinese regional market recovering at the same rate as the major cities in terms of connectivity elsewhere? Because what we'd seen pre-2019 was this, or up until 2019, I guess, was this kind of explosion of new services from smaller, and I say smaller, but, you know, still 20 million people, 10 to 20 million people, to a range of secondary destinations, i.e. not capital cities in Europe, North America, and other parts of Asia. What we've not seen is that connectivity recover yet. So, I think it's kind of entirely consistent, isn't it, with what's happening in other markets, that you've got that feed into those major hubs in China, then helping fill those aircraft to come and serve Saudi. I think there's also appetite and interest in the Chinese traveller to explore new destinations, and the product that's on offer in Saudi, I think, is suitably diverse to intrigue that market. In terms of, there's historic cultural tourism, as well as the kind of luxury high end leisure offering as well. So it's going to be really interesting to see just how that plays out over the next 4 or 5 years in terms of the Chinese appetite for outbound travel. And I think there will be consequences potentially for markets that are further away, Europe, North America, etc. So yeah, interesting. Be interesting to see how that evolves.
One of the things that I saw in this market when I came here, and as you can tell from my accent, I'm from Australia, there are a lot of similarities between the Australian market and Saudi market, particularly when you're talking to the Chinese. We've got that diversity of product, tourism product. The people here in Saudi Arabia are very friendly and welcoming, and the kingdom as a whole is 100% behind the tourism initiative. But you've got the natural landscape with UNESCO Natural Heritage Sites, coastline on Red Sea, the city experiences here in Riyadh and Jeddah, and as you said, both the premium, that mix in hospitality and accommodation, which is coming online, which is particularly attractive to the Chinese traveller. And we're seeing, as I said, we've seen great interest with those 3 network carriers coming online in the first half. Cathay coming in H2, and strong growth in capacity from the Chinese market, plus all the other investments and activations that we're putting into those markets. We'll see that market grow. I think, John, you had a great insight earlier. With the Chinese market, it is still not back to where it was in 2019. I'm not sure what the number is. I think the last time I saw it was still about 60% of where it was in 2019.
Yeah.
So for them to be growing into Saudi ahead of some of their historic destinations, I think is a huge vote of confidence. But equally, they're starting out with 2 or 3 frequencies a week. That provides a great platform for growth.
Yeah, absolutely. Okay, let's come back to the slide deck momentarily. So I wanted to show this because I like maps, and we all like to look at these network maps from time to time. This is really showing the journey to the 250 global destinations. So this is current network map, and you can sort of see, can't you? The range extending. You're now into China. You've got to hope that Australia's on that list between where we are just now and where we're going to get to. If only for your benefit.
A market of one.
Yeah, I think it's fair to say there are a number of cities, G20 cities, that aren't captured at the moment, and that's definitely going to be the focus of the ecosystem over the coming years, as that network expands, both more additional secondary markets in China, seeing hopefully when sanctions are lifted in Russia, getting access there, and as we said, there are opportunities in places like Australia, Brazil, and other markets across the globe, particularly where we're developing our tourism product for either our carriers to go to. In Riyadh Air and Saudi Air has been our 2 long-haul carriers, and perhaps one day Flynas, if they when they order their wide-body aircraft. but also the encouraging thing is we've seen a large number of tails coming into the market this year. 4 from China, 4 from Europe, and additional capacity and frequency growth as well from those airlines as well.
And we've got that. We've got one of your slides here, haven't we, that shows some of those tails, and actually, gives a bit of a breakdown beyond China in terms of there's growth happening across a whole range of other markets. So your half-year position on inbound capacity is up 13%. I think our summer figure was 34, wasn't it? But that's just season on season. And you're expecting that full year position to be sort of 14%. And yeah, there's more growth to come, isn't there, from many of these markets. We can't ignore India,
No.
world's largest population, and growing levels of disposable income, although still relatively, relatively low. But the significant volumes of aircraft that are on order there are mean that these aircraft are going to have to, they're going to have to go to lots of places, and Saudi is a natural fit, isn't it, in terms of range and
the range is important, isn't it? Because that's a very important factor in all of this. That for many of these destinations, obviously not the USA, but many are in Europe and in the Middle East region and the Indian subcontinent and Central Asia, are A320neo reachable now, which
Correct.
changes the whole operating economics of destinations that were previously not served. And entering a market such as Transavia is doing, with twice weekly frequencies on the most fuel efficient aircraft, with the capability of round trips and minimizing crew costs and all of these sort of things. That's the sweet spot that Saudi Arabia has access to in the coming years, is the ability to start those routes, suck it and see, quite frankly, which ones work, which ones don't. There will inevitably be network churn. Those low-cost airlines will, as they do to every other destination in Europe, change the origin point, but they'll still serve Jeddah or Riyadh or whatever it happens to be, because that's the way the market works and will function.
And working with carriers like Wizz Air has been an interesting experience, purely because they came to the market and added a whole lot of destinations last year. I think at one stage they got to about 23 destinations. That has been rationalised a little bit as they've worked out which markets performed best. Some of it was to do with engineering, but issues and challenges that they're facing inside their own business, but also where we started a whole lot of routes, identified the ones that performed really well, have doubled down with additional frequency, and then potentially, you do come back and look at those routes again. Some of those that didn't quite work out in year one, and then come back and look at those again. But the key thing is, everybody learned quickly. Those that succeeded doubled down and grow, and our growth out of Europe, particularly Italy, Hungary, and Austria, where Wizz are now, the number one carriers on all three of those markets, has been a success story in many respects, because their price point and the value proposition that they take to the market also brings some marginal travellers, people who were thinking about coming to Saudi and maybe balked at the airfare on the full service carriers, or had the flexibility to take the 2 flights a week or 3 flights a week frequency, come to the market, test the market, and they're coming back. We're getting great reviews from the passengers about their views on the destination. So from that point of view, every segment in the market is pulling in the same direction. And John, you're 100% right. The XLR will change be the game changer for us when it comes to a thin route like Copenhagen or Edinburgh, for instance. You could put an XLR into that market and turn it on from day one. You don't. The risk today of putting a wide body on those markets.
Oh, you blow your brains out. Yeah.
But coming in with a 200-seater aircraft and being able to turn it around in a day is the game changer for a lot of carriers, the Saudi carriers, but also for a lot of those OALs.
So you're in the space of the past 3 minutes in the conversation. It's reminded me of having looked at fares about a year ago from Edinburgh with Wes to the UAE. You've now opened up a whole new layer of Googling for me now to see if I can challenge myself to get to Riyadh or Jeddah for a similar price point. Strangely, my family weren't convinced when I tried to persuade them that, you know, routing over somewhere in Eastern Europe and it taking twice as long, you know, wasn't an adventure. But maybe I'll have to do it myself just because I like airports and travel. Well, but the prospect of a direct service from Edinburgh, even better. So I'll hold on.
Skyscanner had Edinburgh Jeddah as one of its top searched unserved city pairs.
Yeah, so, maybe that was me.
Well, we look forward to welcoming you soon.
Yeah.
I'm getting worried. I might be the only one sitting at my desk at the moment. One person's off to Australia, one going down to Jeddah, Riyadh.
Well, that's it. We're going to go somewhere to find some better summer weather. There we go. We're nearly an hour in, and I've managed to only mention the weather now. We've got a couple more slides to show you. So this one is opportunities for growth. So this is your analysis, Trent, on top unserved inbound routes in 23. So these are people who are traveling indirectly, and theoretically there are big enough markets to sustain direct services. So there's a really interesting diverse list here, aren't there, of routes. I'm slightly disappointed not to see Edinburgh making it onto that list, but you know, maybe
I say that there was a London demand service in 1985 that I was involved in.
Oh my goodness!
Yeah, so it will only be coming back.
Well, there we go.
A lot of it was to do with Aramco and all the oil market.
Yeah.
It was there.
It's a potential XLR market. It is, as we can see, 34,000 inbound visitors last year. Inbound passengers, last year. So there is obviously strong demand on.
And does that include the leakage that always exists over the causeway?
No, this is straight.
Bigger. Yeah.
This is straight ticketed passengers. So I hope in these numbers we don't. When I'm sharing these numbers with airlines and other trade partners, it's always about inbound traffic only, ticketed, and I don't play with the numbers. It's straight. This is straight from IATA. So it shows you the scale and what you could do with stimulation and competing against, as you said, Bahrain. That market could stand on its own 2 feet pretty easily.
Mm-hmm. Yeah, you've got some US markets in there, New York, Chicago. Yeah, interesting.
Well, given Riyadh Air's strategic partnership with Delta, I mean, clearly there's going to be a JFK, Riyadh, maybe an Atlanta because it is some other flows, but you know those are. Yeah, hang on there. Trent, have you got the press release ready for them?
It's fine to say moving on, John. Perhaps
I certainly can't comment.
Yeah, perhaps more topical to say we haven't heard any breaking news about a short haul aircraft order yet. Not that would be operating in New York from.
No, it's Farnborough's been really, really quiet. I mean, it's been a bit of a damp squib. Journalists are saying 180 aircraft orders. that's the bog-off offer, isn't it? Buy one, get one free, because it's really only 90 aircraft and a load of potential orders on the side. So that's not quite the case. And, Qatar Airways have firmed up an order for some 777s, but nothing from any of the Saudi carriers, which I think is a bit of a surprise to many. But maybe part of the surprise is that they've not made that announcement. And do we read into that, because Boeing were not in Farnborough in a big way, that they've opted for 737s at some point? I don't know.
Oh, there's speculation right there.
Fred, can you comment on that one?
No, moving on.
They're both great aircraft.
Yeah.
Whether it's a 73 or a A320, they're both great aircraft.
Yeah, it'll be one of the two. 50-50 chance that you're right, John. Okay, we've got a couple more slides we just want to show you. And let me just move back onto the slide deck. So this is kind of interesting, isn't it? Because it builds a little bit on what we were saying in the context of China, and building those relationships with airlines and getting to a point where they're willing to enter in a market because they can see that there's appropriate demand. But the challenge is filling aircraft all year round, isn't it? That's really the play when you're trying to build a sustainable tourism market, isn't it? And that's, I sort of think, as much as I joked about it'd be nice to go somewhere where there's warmer weather, my perception is this a market where I would go in the summer? So I think there's opportunity, isn't there? Certainly for the Western European market, to think about this as a shoulder season destination, winter destination, for sure. But there'll be other markets that are not constrained by that, really. And I guess the product on the ground will be geared to that, won't it, in terms of maximising the parts of the country where the climate is more hospitable.
This is my big pitch to you and John.
We're listening. We're in.
Yeah.
I think it would be great. We've developed seasons all year round, and it's about a year-round offering now for tourism. Big focus, and one of the big developments is in Abha and the Yasir region. So Abha and Al-Baha in particular. The weather, the average temperature there is in the low 20s during this time of the year. It's in the mountain region, and it is the climate is quite cool. And as you can see, we're putting a lot of capacity growth into that market this year. Abha, for instance, is up 14% on the same period last year. The airlines are backing it in, putting capacity, but they're also backing it in with promotion, which we're working with them on. And the latest one we've got is, if you're here in the Kingdom, it's 150 SAR tickets from 150 SAR on Saudia into Abha, and then 30% off if you're traveling from the GCC, Egypt or Jordan. So we're developing these destinations. The airlines are participating and supporting with capacity. And I guarantee you, having just come back from the UK, Abha and Yasir is got a much better climate than the rain I had in London 2 weeks ago.
For sure. For you
don't discriminate who gets where.
You're reeling me in with the low 20s, because that's peak summer where I live in the north of the UK in Scotland. So that sounds appealing, but better than the sort of scorching temperatures elsewhere. So I think that's the challenge, isn't it, to break down perceptions about about a market. So it's really interesting to hear that there are different climates and different products available. Sounds good. Sounds interesting. John, maybe we need a trip.
Yeah. Certainly. Let's do it.
And obviously, you will see more and more over the coming months about major events coming to Saudi and for Riyadh season, which is our premier season for those winter months between November and March. So there's plenty happening here in Saudi. There is investment in events, but the tourism infrastructure, but also it's not just a one city destination. It's a diverse landscape, diverse people, and diverse experiences. And we look forward to welcoming you, John, and many of the other.
Look forward to it.
Great. Well, listen, we're just about out of time. I think we had wanted to have a little bit of comment on developments in the industry, but I'm not sure we have too much time for that. Of note, I think, John, we just wanted to reference really that the Olympics are happening, starting opening ceremony
Friday.
Week on Friday. But it's never anything to get too excited about in aviation terms, is it? Because
I'm staggered by the number of journalists who've reached out to me in the last week wanting OAG data, and surprised that it's not going to attract lots of tourists this year. It doesn't. It didn't in London. London was 6% down on tourists when the 2012 Olympics were here. Japan, no one knows because of COVID. It's the legacy effect that it has on the brand that is more important, and people who come in 2025 and 2026. But I also see France has now been confirmed as the host city for the Winter Olympics on the back of where they're at the moment. They may be looking to find out if there's an escape clause in that contract that they've got.
We'll watch that with interest. Okay, I think we'll wrap it up there. We will send out a copy of the slide deck and a recording of our discussion later on today, so you can all look forward to that. We'll be taking a short break over the summer, although has summer been and gone here in the UK? Probably already. And we'll be back in September with our next webinar, so be sure to look out for that. It just remains to say thank you so much, Trent, for joining us today. It's been really interesting to hear about the market. And thanks again, John, for as ever for your contributions.
Pleasure. All right. Thank you.
Thanks, everyone. Thank you. Thanks, Trent.
Bye-bye.